All right, welcome to my month of April market recap. Um, I guess we can kind of go over personally, then I can kind of go over, I guess, market in general. And yeah, just go over a few stocks that moved, a few things that didn't work, and we can see what was going on in the market. So I guess personally, I'm in a probably 4 to 5% equity drawdown, which is completely normal. Yeah, so basically since the start of April, I've been going in circles, but it's part of trading, right? Uh, Equity curves are not linear, so it's part of the game. Just capital preservation mode right now, which is totally fine. So yeah, that's basically me. I was thankful to have a good end of March of February and in the month of March, which a lot of traders have actually been in a sideways momentum, I guess, period since then. But the market did catch up to me in April. Again, part of the game, just capital preservation mode. Hopefully we can get some direction in the near future. So let's look into the markets. If you look at the SPY, you'd think a lot of traders would be having great months. Actually, it's up 7% almost, I believe. I guess that's on the 31st. No, 6%, sorry, 6 point some percent. Same thing with from the highs to the lows, I guess. QQQ, similar thing, 8%, 8.2. But unfortunately, this was a specific month or time period where, looking under the hood and looking at specific stocks would show you a different story. And that's why, you got to be cautious while looking at these indexes, right? They are weighted. There's a lot of things going on under the hood, especially in speculative names. This wasn't the case. And if you look over time, and there's certain markets like in 219 in this area, and 218 in this area right here, where it was a similar story, right? Where sideways periods are probably the best just to, take a break or step off the gas, right? There's a lot of these speculative names, the growth stocks, we're not moving. And I have a simple theory for this, especially in the month of March. So let's disconnect the screens here. Let's get FANG. Again, as we know, the SPY is a weighted ETF, as all ETFs, right? Based on market cap. So let's look at FANG here. I don't know if you guys realize this is the month of April. They look pretty similar, right? Exactly. SPY, I think like the four biggest weighting stocks in here are the FANG, right? All the big boys. So generally when this is a triple ETF, obviously this FNGU, it was up 60% though. So FANG was up 20%, which is, crazy month. So when the FANG's up 20% and they had the, majority of the weighting in the SPY is going to grind up. And that's exactly what happened. And as you can see here, when it kind of slowed down, the market slowed down, especially when, I'm not saying if FANG's down, the market's down, but especially when nothing else, a lot of the other stocks aren't, but they are, the market will grind up. And that's exactly what we saw there. Same thing with QQQ, right? Same thing, they're the biggest weighing. This is a perfect example for, scenarios where, looking at the indices are not always the best case scenario. You always, looking at specific stocks will always win over, a glimpse at the indices. So in terms of growth and speculative names, we could look at IWN to be a lot better of a look. And then we can see right here how, it's been sideways. Remember I mentioned earlier, a lot of people are in a sideways period since February. This tells a story right here. You can look at TNA as well, same idea, right? So this is basically what we've been seeing in terms of a lot of equity curves and a lot of stocks, right? In growth land and speculative land. Just, no momentum, no ranges, nothing like that. Very difficult to get in, and few things that do work often fail. And there's only probably a handful that actually worked, and there's really only one that actually, I believe, one or two that actually went really, really well. And I'll go over those later on. So that's a bit of the market. I guess you can look at any other, ETF, semiconductor, solar, clean energy, ICLN, oil and gas. We can go through them all. I'm not going to go through them all right now. But there's not many other than SPY and QQQ that we're doing phenomenally good, I guess. I guess where we can go in next would be, let's just take a look at Tesla actually, because this is a good, for me anyways, it's a good indicator of speculative money. When Tesla does well, it's probably a good indicator, and especially in this market since 2020, late 2019, it's been a good indicator for me anyways. You can see it's pretty much been sideways. There's been a few setups here, but they're mediocre. And let's take a look at ARK as well. Same thing here. This ETF is just made, it's purely of growth speculative stocks, right? And you can go through them all, and you'll see very quickly they all look pretty similar to this. This is probably the best indicator for you if you want to look at speculative growth stocks. This and IWN, it tells a story right there. There's no range to this. There's no setup. They're in sideways momentum, which is exactly what I've been alluding to here. So we can go through a few stocks I did, I guess maybe a few mistakes or learning curves I had. So I guess we can get straight to the point. The first learning curve I had this month was exposure, right? I got, you kind of overexpose yourself to a certain sector, I guess. Not that I was all in one stock, that would be, even worse, but I was probably like 65% invested in one sector, which that was the Bitcoin related sector at the beginning of the month. And what happens with that when one stock goes down, often the whole sector starts, fading, or vice versa, right? When they go up. So you have 65% of your account in one sector. You got to be super, super, super selective, or I guess cautious with your sales. It's almost like being, over leveraged, using margin. The second something isn't working, you got to cut it and just, keep maybe one or two of the ones that are really working well if you want to. But you can't have these wide stops, and you got to be really on the ball here, because if they all fade and they're all up 20%, in the case where I was here, we were over it, you take a pretty big hit, right? Not that I gave back a lot of money, but being up 20, 30, 40, depending on which 1%, and giving it all back within a day or two, it's not the funnest thing in the world, right? But you live and you learn. So I guess what I learned here was, when I'm overexposed like this, it's like being over leveraged. You got to be super cautious, and I should have kept one or two, maybe two, of the ones that I thought were going to be the strongest the second I saw weakness. But I didn't, right? I kind of stuck with the same game plan with all of them, which was actually a little bit of a looser game plan that I usually have, just because Bitcoin was looking so well. And it kind of bit me in the ass, right? So we can go over them. So here we had Monero as the first one. I got in on this day here. Again, Bitcoin was looking phenomenal. All-time highs, was flagging. Beautiful chart, beautiful technical chart. And as I said, all-time highs, there's a lot of speculation. I got in here. I was up, you can see here, 40. It was actually up on this day pre-market. I was up 50% at one point. I took some profits here, but probably like a quarter, maybe a third. And then on this day here, usually I sell on the 10-day, but I like to wait for the close. I didn't wait for the close. I said, let's wait for the close. However, just, it kept dumping. At this point, I said, okay, we're going to use the 20, a little bit of wider loop, stop, because, Bitcoin's looking so well, and we're already down here now anyway, intraday. Next, it breaks that 20-day as well. Right before close, I sold it. This was actually up pre-market, so that was a, red 20-day on this position. So that's the first one. Second one, Riot. This one was a short. I didn't get in as early because it was weak. It was a lot weaker than Mara, right? But I did get in on this day here when this day here kind of tight candle, like gapped up a little bit, and Bitcoin was breaking up to all-time highs. I got in, right on this line around on this green day here. Goes up, gaps up. Again, this one gapped up with crypto, and I didn't wait till down here. I got out like break even in this area here, but again, 17% probably swing. This is all in one day, right? Next was GBTC. This one this was the only one I did not stop out on this day. I just gave it more room because I think I got in on this day here. I got in somewhere here, and this is the day where actually no, I got in on this day here, I believe. Anyway, somewhere there. This is the day where I got out of Mara and Bitcoin and Riot, where you can see they had these big red days. But I gave it till this day here. I gave it another day, and when it gapped down here, I think my average was around here. So it's either this candle or this candle I got in. And I stopped out here. I did take a little bit of profits, but again, not much. I probably took a fourth on all of these. So you're giving back 20% around on each of these stocks. Goes back to my point of being overexposed, right? So you got SI, same story. I got in on this little, pocket flag here. Again, I was up 50% almost, 40-something%. This day here, gaps up, down 20%, same story. 10 days, gonna use that, crush that one. Crush the 20, next thing you know, it's past the 50, and I stop out of the rest from, and I did take some here. So that was the start of the month. Took a pretty big hit there. I mean, I didn't lose money, but I gave back, a significant amount. The other ones I traded was semiconductors. So Soxel, this is a 3 times leverage ETF. I got in on this day here. You can see right here on opening day range highs. Pretty good trade again. It was up 27%. Took some here. Again, I stopped out here on the 10-day. Unfortunately, in this market, this is what you're kind of seeing, right? You're seeing extension, come back to the moving averages, like they typically do. Usually they would surf this in in the last year or so, or a true bull market. Not to say we're not, but we're in a little break for sure. This would just surf the 10-day and, it would take off again right here. But here, just like there's no moving averages, it gets extended and just breaks through and breaks down. So this was one good trade. I also traded LRCX. This one I didn't trade a lot just because I got in on this day here, on this big day. I got in late day actually. I didn't have that much of a great average. I think I got in later in the day, like around here. I didn't get in right on the beginning of the day, so I got in like midway, a third of the way up the candle. And then the next day it came up and it was like right near my stop. Like I took it off right before my stop, and yeah, if I would have kept the sell rules, yeah, I would have made a lot more money. It hurts to look at it, but again, I kind of learned from that. I was kind of in that Bitcoin like scenario where I knew I don't want to be in a scenario where I would be overexposed, and I already had another one which we're gonna go over next. So I didn't want to keep this one because it was weak the next day. And if you look at Stocksold the next day from that breakout day here, it gapped up, and AMAT was the other one I was in here. See how it just had a small red day and it didn't, So this one here, I did. I just, I didn't want to risk it, so I just got rid of the one I thought was the weakest at the time. This, it didn't pan out that way, but anyways. And then the other one, yeah, again, AMAT. So I got in on this day pretty clear here. Got out some here again, same story. Stocked out on the 10-day. I wish it kind of surfed. Maybe, if the 20-day would have caught up a little bit more and took it off. But again, it's kind of breaking down. I guess now we could probably go over a few stocks. These were the main sector plays I had. I had obviously a few other trades, but nothing, spectacular. And as you can see, these aren't that spectacular either, but for what it is, this is probably the best I did this month on these type of plays. So we had, let's see here, we had let's say BNTX. This was one of the only large caps that actually made a play all month. I believe this is the only one that actually went parabolic. Had great numbers here, 27% forward looking, 27,000% EPS forward looking, which is insane. And this is probably the only large cap that went parabolic that I know of, right? So that's a testament of what the market's looking like nowadays. Beautiful play though, great play. Unfortunately, I missed it. So yeah, it's a hard market. If you miss them, there's not many others out there to play. There's also BTX and small cap land. This is one of the most crazy ones this month, 1,000-something%. Yeah, but just, there's a lot of these plays that I like to play, like short setups, but they're just, here, if they were gapped up on this day here, it would have been a great short setup, but it doesn't. Here, it's day 2, I'd like another gap up here, but again, looking like, now we're in May, but it's not gapping up, so. But this is, usually you get a few of these, there hasn't been like in December, January, November, this, April, March, it hasn't, everyone knows about them because there's so few. So these are another few trades I did. I traded TNA, I believe right here on this flag here. I got in late day where you see this little line here actually. I got in when it broke it right there, and then, I was up 1% or so at the end of the day. gapped up on Monday, got stuffed here kind of deal. And I got out right here when I took out the low with this consolidation. Again, I could have, followed the sell rules and wait till here, and I would have got it stopped out. The market was it just wasn't looking good, and it's, I kind of broke my sell rules, and, I could have kicked myself in the butt for it, but it did turn out well. It wasn't a big winner either. Like, what was it? Like 4%. I just took my money, and I had a few other things going on, so I decided to leave it alone. SPG, same story. Got it on this break here, and took profits on this candle here when it broke. This support. Same story. Could have sold. It might go higher actually. This one I might still bite myself in the butt for it, but it was the end of the month. I had a few other things going on. Like I said, it just and it wasn't a big trade either. 2, 3, 4% maybe. Just took it and left. So these are a few that had good earnings. So this one, for example, just fading. It's very unfortunate, but these are the type of things that in other markets they would be going, right? Would have had a look at the volume coming in here, would have supported, or maybe created a high tide flag, and went. But this is just a testament of the market. Other similar ones would be this one, had great, they had DMC recommended a short phase 3 trial just due to, how well it was going and, how promising it was looking on the tumor research side. It's kind of an EP, and it did have a small flag here, but look, you're looking at a 10% move at best if you nail entry and if you sell the peak, right? So it's like, at one point you got to figure out, where do you want to just, preserve your mental capital, take it, take AA plus setups only, and this was, a case of that, right? You got to be super specific in these kind of markets. But I got, like I said, on a 4% drawdown, I didn't take any bad trades, but that 4% is completely due to, stopping out so often, right? My stop out rate was I got stopped out a lot this month. And like I said, the risk was always in place, but just getting stopped out just chews away at your profits. And that's what happens. You got to be super specific and picky what you get into. Is there any other like this? CLF, same thing. Just had crazy numbers here. If you look at them here. Gapped up, and after one day, it's just they're it is kind of lining up here for May, but unfortunately these are the type of plays in the prior months that would be going right. What else? BNTX was one of those. It did end up going. This one too. Look at the volume coming in. It could have been like a small EP, and it did end up working a little bit late, but there's a lot of clean moves going on, right? We can go through Shopify. This is another one I played. Great earnings here, great numbers, good volume, not insane volume, but an hour in the market, it was already above average. So I got in, opening, at the 5-minute range highs, right? It was a good 8-9% trade. Next day, bad day. Next day, I stop out, break even, right? This is the frustration we're dealing with. There's no follow through, right? Very difficult. Same thing here, RBLX. I played it early month right here. You see this flag on the hourly, forming it on the daily. Again, I got in here. I took some profits up here, and then ended up stopping out of the 10-day here. Just this was a good trade actually, but again, these hot stocks, in other markets, this 10-day catches up, it surfs it and takes off again. But here, just it's like there's no fuel here, right? They just nope, next stop. They keep going through like there's nothing. So that's what we're dealing with. This is one I did not trade, but had a great setup and did not work. So pins, if you look right here, great flag forming. A bit extended from the 10-day. Tightening range here. Unfortunately, got a big wick, which I didn't play it because of that wick. But it was still, in another market, it probably went on that day or the day after, as it would just, tight ranges, lower volume, forming here, and then, it just fails. So this is just another example of, I'm just trying to show you guys what type of market we're in. A lot of the leaders, a lot of the growth, speculative stocks, they're not going anymore. So, this is another example. NVIDIA, this was a good one. It had a small pocket here. Unfortunately, I didn't play it. It was kind of a difficult play. Here, you could have seen it as a small EP, again, but the second the 10 days catch up, here it did, work, but it, coincidentally, there was good news on the same day. But, once it catched up again, see it's breaking down again. However, this would have been a decent play. Actually, it had a good weekly. I did play it on this week here, and same thing. When I played it here, it was a good play, and they're just breaking down. There's, this is when this is what you're looking for to make money. See how these are just surfing, 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 right? Surfing, surfing, surfing here. This is what you're looking for. When you get these things and these just breakdowns every time the moving average catch up, it's not an ideal market. The vaccine plays did pretty well. They had both mRNA and NVAX had nice little pivots here. Then on this day here, because of Johnson & Johnson was paused, obviously more allocation goes to both vaccines. But however, there's just no play, right? There was a little play on this day here, around right here, but it was already up 6% or so when it hit my alert. And I just, like I said, you got to be super selective. It was already up 6-7%. I just didn't want to risk it, and like I said, it did end up going up a little bit, but look where it is now, right? There's no fault. Like I would have got stopped out. There was no reason to sell up here, so I would have got stopped out. Same thing, mRNA. Nice pivot here, same idea here. There was a Johnson & Johnson. Same day, there's also a few articles saying how this is the most, practical and effective one. That was also good, but still, there's no plays. They're gap ups. There's a few gap downs here, 2 in a row. There's no tight ranges or flags or any type of setup, pivots setting up, which is very frustrating. So that's that. Let's go through a few other here. OCGN. I actually did play this one. I just pointed it out as a day trade. I played it somewhere in I forget what day it was. It had this nice flag here. I don't believe I played it. I believe I played it on this day here, on this 5-minute flag here. I played it right here, right? I played it up in here. It was a good, 30% and then I forget what I had. I think I had like 2,000 shares maybe. Anyway, I don't know what I had. Something like that. It wasn't a huge position. It was kind of a day trade, just pure boredom. Took out like, 3/4, 90% actually up here probably. I think I only had like 200, 300 shares, and then late day offering, right? So I get stopped out there. And again, it was like a day trade, so it's not the biggest deal. But again, it had like a flag here, but it's kind of wide and loose, and it gapped up here. It's a very, very difficult one to play, right? You kind of want to get in here, and then it gaps up. So where's the entry, right? This is what it is all around. We already went over these ones. Net was one that did work. I wanted to get it on this day here, but I didn't, just because it was right on the line. Again, super selective. A lot, in a bull market, when you have these lines and they hit them, oftentimes you'll just burst through. But you got to understand, in these kind of markets, oftentimes when they hit these lines, more than not, they just bounce and they reject, right? That's the difference between bull and like, I guess sideways, not a bear market, but, when things aren't working, this is what you see. Unfortunately, next day gapped up. Gap ups are hard to play. I just, I was hesitant, didn't play it. It's one of the few I skipped on, and it ended up working decently, right? And hopefully here, it can serve that 10-day and keep going again, but that's not what we've been seeing lately. NVIS, this one had a nice little pocket here. I had a line here. Again, it was up 25% by the time I hit my stops. I said, I'll wait. Next day, it gaps up. Again, very difficult, gaps up. I kind of passed on it. Next day, Wall Street bets gone on it. It was up 150% from the, pivot point. I wanted to gap up here to play short. Unfortunately, didn't get it. I did play it on the next day here on like the secondary day, just as a day trade. Again, pure boredom. These are all late month. I was so bored. So I was using this 24 line here, resistance of the previous day flag as a line. I got in here. I was going to add on that line and then stop right above. But then it never got there. So I added on the first 5-minute red candle. And then I was up like 6%, I believe. Yeah, 6.3% or so. I think here again, I had 1,200 shares. I took, 1,000 out here, had 200 left. I, stopped out break even. Tried it again here. I stopped on this candle, right? I tried it again here, 24 on that break. Got stopped out break even. And then I didn't want to fight it, right? It's not my type of play. I didn't want to get into that headspace. I just left. And unfortunately, if it went up here, you could use this line, and if I would have got in again on this line here, I would have stopped out on that wick. I would have got stopped out there. Anyway, it's a very difficult market, and it's not really my play, but I thought I'd show you guys the play. I did play there. Futu again, just testament of the market. Very difficult. Beautiful flag here. Beautiful numbers. I think it's pretty obvious where I got in on this candle here on that break. Nice 16%, I think I was up. Next day, gas down, and announces an offering. So that's the type of market we're in, right? There's this fail of follow through all around. It's very frustrating, but you got to be here in case the market decides to go. Otherwise, you might miss out. Etsy is another one that's looking beautiful. Starting to break down in May, but again, see here, tries to break out, 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 there's a few times tries to break out, and just every time, this is what I'm talking about, where they hit these lines and they're rejecting these markets. But in previous markets, it would be going down. So this is just an example of what's going on under the surface. So that kind of wraps up my surface, my wrap up, I guess, for the month of April. It was, we were in a pretty sideways momentum. It's pretty normal, anything in life, business, whether it's at the gym in terms of your weight or whatever it is, there's always these plateaus, sideways momentums. It's basic physics of life. The important thing is to make sure, it doesn't look like this, right? Or like this, as long as it's, 20, under 20, 15, percent, you're doing good, right? You pat yourself on the back. What you don't want is this, right? What separates, profitable traders over years compared to unprofitable ones is, in this market here, it's very, very easy. Everyone can make money, right? It's very, very easy. But to hold your money in this area here, that's what's difficult. And over 10 years, this is what ends up, your P&L, if you want to make it linear, will look like this, But if you can't preserve your capital in these periods, you're back working your day job, right? These are the times where you need to master these times. Anyone can master these. They're quite easy. These are the times where you should spend a lot of time reading or doing whatever, right? Just understanding the market and really, what helps me is studying the markets. Look at previous markets, in these types of periods. If you look back to 2018, in this area here, look at stocks, look at blogs, read books. And again, in 2017, in this period here, right? Go study these markets. You don't need to be especially experienced. You don't have to have a lot of years of experience to understand these, right? You can speed up that learning process by reading books and studying markets. Put your time in it and understand what was working, what was not, and what needs to be done in here. A lot of beginners, what happens when you're in this period, they start trading here and everything works, right? And when you get here, it stops working, and you think your curve, your capital curve is supposed to look like this, and then they start second downing themselves. They start getting looser on their stops, et cetera, to start trying new things, and by doing that, next thing they're in a 50, 60, 70, 80% drawdown, and their accounts blown, not blown, either way, you're starting pretty much back at ground zero. You got a lot of water to tread. The goal here is you want to have the least amount of water to tread when the next bull market comes, right? And this, it's very difficult. A lot of times you're sitting on your ass and doing nothing, right? You got to chill. Like I said, even if you don't have a lot of experience, you can gain experience by, reading books, going back and studying those markets. There's blogs, look at stocks, go look at, leading stocks, hot stocks during that time, and look how they were acting during those periods. And you'll see that, they look like this. They look like this, and you just, if you don't, honestly, if you don't study the markets, you won't know. And, I can't, your P&L is going to look like this because you don't know what you're supposed to do. But, just know that these periods here are completely normal and they're part of trading. And these are the times where you got to master in order to, be profitable over time, right? So like I said, study markets and you'll understand, what these periods bring on. Like I said, it's a hard penny market. We're not capital preservation mode, and hopefully, we can get some tightening here. It is in a beautiful flag, IWN here. If this can break out of, this area here, 227, 230 area, we could go to another run. But, so yeah, that's it for my market recap for April. Hope you guys enjoyed it. I'll see you guys in the next one.